Friday options expiration calendar month 11/18/2011. Happy Friday. Here is the S&P 500 weekly Friday update. What we have here are two different diagonal trend lines. This first diagonal trend line comes right here, and this weekly sell down bar is on the other side of it. That is confirming the reversal to the red line of the 20-week. However, the low is holding support. But let's talk about other reversals that we had over here before, that we did early in the calendar year. That was a 4-week topping pattern, and how they confirmed, like I've always said, is that you have to have this down week, and this was that, and then the follow through starts right away, and it breaks its key support levels. I'm going to draw a horizontal trend line across there so that you'll be able to see that later. So what I want to show everybody here is this weekly breakout from the calendar year low. Went 4 weeks up. This lower trend line from the very low of that calendar comes straight right up here, and you could say that the previous week, not this week, but this week here, that from that particular point that we were in a reversal below the 50-week moving average, and we covered it very clearly. Yes, we have. Now, this week here has done exactly what it should do, and it sold down to its support levels. Okay? And here was the trend line. This trend line over here was a major support level in this 4-week top, and it broke that through that bar. Now follow this trend line horizontal across here, and the weekly bar here this week is below that. That's your major resistance level. However, this little line right here is 1250 on the S&P, and when you broke that line earlier in the week and started going below it, that earlier break below 1250 was telling you that this was validated here, that the reversal was in play up at the upper end as it started to fall through before you got to this major level. This is a major support level right here at 1215, and that diagonal trend line, it goes right across here. This is where your calendar bottom year was put in. You can see that right there. That's this calendar, but this support level. Now, let me tell you what's going to happen in a nutshell. What's going to happen is that the super committee is coming out. You have a holiday weekend coming up. Got Turkey Day. Happy Thanksgiving to everybody. The other thing that I would like to tell you is that this bear trend that we had in the calendar year had broke itself once we got a closing price above this trend line right here. That's where your tops were. But we've come up and we're testing it now. So this trend line here is that you have this whole aspect of this whole part here. And yes, it's a reversal. The 10-week moving average, here's the bull case. Here's the bull case. The 10-week moving average, you got above it 1, 2, 3, 4, 5, 6 weeks. That's when bear trends change, because you have to have a rising 10-week and you have to close 10 weeks above it. The other thing about it is that the crossover of the 10-week above the 100-week gives a bull case. However, that's the bull case positives. And this line, this neckline here, is ultimately this 100-week moving average at 1200, which still keeps you roughly about 125 handles above this original low calendar year on the S&P, right around this 1074 and some change, 1075, let's just call it. Here you will know that it's going to take good data out of Europe over the weekend, It's going to take the U.S. Super Committee to do something in order for this weekly reversal from that rally. This is the best calendar year rally that this S&P has really had at year end, was this rally right here. And now it has reversed. And it's reversed to support levels. Now, let's talk about the bear case. Here's the bear case. The bear case is the 20-week moving average is declining, that the closing weekly bar on the left shoulder is below that 20-week. Okay, that's the bear case. The other part of the bear case is, I'm showing you what the bear case is, that you've had that reversal, and this week right here confirmed it, and it come off of those other lows that I talked about in that trend. And basically, you could say that it started to confirm some of the reversal, even though it was a positive week. Once it got on the outside of this bar, and it was a narrow range week, you held the 20-week here, you held the 20-week here, and you held the 20-week here, and you were closing above the 20-week here. However, you're starting to violate that. That is a bear case. The other thing that can happen is that the 200-week moving average remains at 1137.36 as of the closing bell on 11/18 on the S&P of 2011, at a very major neckline. Now, if you get bad news and the Super Committee in the U.S. and all those other people in their financial crisis don't do the right thing, you will sell down here because the reversal's in play. The bear reversal from this top breakout of that rally, it got right in here, it confirmed it this week, and it's at support. If we break this major trend line right here, where my pointer is, and we start to sell down through it, and if we sell through the 10-week and the 100-week, and where is the 100-week moving average? Let me tell you, it's at 1200.32. Oh, yes, it is. And where is that 10-week moving average? It's currently at 1211.99. And where did the S&P close out the week? 1215.65. It's very close. Stop market orders will be triggered if you sell through the 10-week, if you sell through that 100-week and it doesn't hold the support and it does not base and consolidate going into the rally. Now, Thanksgiving can have a great upside rally to it, but it's going to take good news to break the highs over here. And you would have to start with a big gap on Monday above the 50-week moving average. And where is that 50-week? Well, that's at 1270, so you got to gap up toward it and then run through it, but you got to get above 1270 on the S&P to see 1300 or 1312 or 13 and a quarter on the upside of the year-end rally that started over here. And until you have 4 weeks closing below the 10-week, that's the blue line, you got to have a sell through it, and you have to stay below it, and the 10-week would have to go down in value just like this example here. And this is where we're at right here, right now on the S&P. And you can clearly see why it's important to understand what bear rallies and calendar year low rallies and seasonality and where you're at and how it's pulled back to support, how it technically has reversed its rally to support. And it is support number 2. Support number 1 was up here at 1250 across this bottom, right where this little line is. That was support 1. It failed it through this week. Support 2 is tested. Weekly moving average sell through sends you down to the 200 week. That's the bear case. So, generally in Thanksgiving, you can have a pretty good upside move if you get good news. You need to know to buy the bear, though. If we sell through the weekly moving averages, you need to buy the SH, the SDS. You need to get put options should that be the case. But on the other hand, should it be the other case, and it'll prove itself, it's a reversal. It's a bear top reversal. However, remember that this support line is where it's reversed to. with moving averages here to support it. If they sell through, it's a short. If they bounce off it and go long during the next week, holiday, happy Thanksgiving, that's where you go. You go up.